In this tutorial on safety orders and managing position size with the TrailAlgo DCA strategy, our focus today is on effectively setting up the TrailAlgo DCA strategy to enhance your trading performance and manage risks efficiently. First, begin by navigating to the settings of the TrailAlgo DCA strategy. This is where you will find various configurable options that play a crucial role in how the strategy operates. If you scroll down, you'll locate the pyramiding options. Pyramiding allows you to divide your capital into several smaller investments, known as safety orders. Typically, 4 safety orders work best across various markets. However, if you have more capital, you can increase this number. Next, set the base trade value, which is the initial amount you invest after closing a trade. Calculate this amount based on your total account capital and risk management strategy. For example, with a $10,000 account, you might start with $600. Avoid using 100% of your capital unless you have extra funds. Instead, set the initial trade amount with a factor multiplier of 2. This means your trade amounts increase like this: 1 times 2, 1 plus 2 times 2, 1 plus 2 plus 6 times 2, and so on. By the 4th order, your capital usage matches your target percentage, keeping the average price, which is the blue line, close to the current market price. The factor multiplier is essential for this strategy. TrailAlgo's system uses this method, and you can customize the settings to fit your needs. Additionally, there is a leverage option in the settings. If you aren't using futures or leverage, set it to 1, meaning your initial capital stays the same. With a leverage of 10, your capital and your risk and reward are multiplied tenfold. Let's explore how these settings impact your trading strategy. When setting the pyramiding options, consider market conditions and your risk tolerance. In volatile markets, more safety orders help you average down effectively by placing additional orders at lower prices if the market moves against you. For stable markets, fewer safety orders might be sufficient. The base trade value is the initial investment amount after closing a trade. Calculate this based on your overall capital and risk management strategy. For a $10,000 account, starting with $600 is reasonable. The factor multiplier then determines the amount for each subsequent safety order, helping you average down your position and bring your average cost closer to the current market price. This method increases your chances of closing trades profitably. For example, if your first trade is $600 and the market moves against you, your next trades would be $1,200, $3,600, and so on if more safety orders are used. Leverage is another critical aspect to consider. Leverage can amplify your gains but also increases your risk. Setting leverage to 1 means you're trading with your actual capital. Increasing leverage to 10 means you're trading with 10 times your capital, leading to potential significant gains or losses. Adjust leverage based on your risk tolerance and market conditions. Higher leverage can offer greater returns but also comes with increased volatility and risk of loss. Use it cautiously and ensure it aligns with your overall trading strategy and financial goals. Finally, it's important to ensure consistency between the quantities in the Properties section and the Algo Settings section, especially if you're using alerts to remind you of trades. This consistency helps maintain a systematic approach to your trading strategy, ensuring you follow your planned trade sizes and risk management rules. Consistency in these settings helps avoid mistakes and ensures that each trade aligns with your overall strategy, maintaining your desired risk and reward balance. To further illustrate the effectiveness of this strategy, let's take a look at some backtesting results. Backtesting involves testing a trading strategy using historical data to see how it would have performed in the past. This can provide valuable insights into the potential effectiveness of the strategy in current market conditions. High profit factors and a high percentage of profitable trades, above 90% or 88%, indicate the strategy's consistency and reliability. By analyzing these results, you can gain confidence in the strategy and make any necessary adjustments to fit your trading style and risk tolerance. In conclusion, by using TrailAlgo's advanced settings, you can effectively manage your position sizes and safety orders. This will lead to better performance and improved risk management. Thank you for watching, and see you in the next tutorial.